Welcome to our SBI Securities weekly market podcast. Today we would be discussing what to expect in Nifty, Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that could be in focus from here on in the coming week. It has been an extremely eventful week, the week gone by, that is. While there was a consensus of the continuation of the Fed-led Santa rally to continue, Indian markets had some other plans. Nifty witnessed a sudden fall of 500 points from higher levels on Wednesday, post which it recovered nearly 60% of its losses in the next session itself. Similar was the story with the mid-cap and small-cap space, which fell hard in Wednesday's session and recovered a significant portion of its losses in the next two trading sessions. For the week, if we see, Nifty ended with cuts of 0.5%, while Bank Nifty witnessed profit booking to the tune of 1.4%. Most of the sectors such as auto, financial services, media, metals ended with 1 to 2% cuts. It were the defensive sectors such as pharma and FMCG which relatively outperformed and supported the market with gains of 1.5 to 2% apiece. Even the oil and gas space saw decent buying, gaining 1.5% with Reliance acting as a true market leader. There are two ways to approach the current volatility. One from the derivative market and other from the cash segment, that is the mid cap and the small cap space. We need to study the FI action within the derivative data. Post the sharp correction which was seen on Wednesday, there were no signs of short formation in the derivative space according to the FI data, indicating that the fall and volatility seemed pretty local in nature due to overbought conditions, which is now being nullified to a great extent. Secondly, within the cash segment, if we see within the cash segment, post the fall, we might see the leadership or sector rotation taking place, and the old sectors may not take a lead in the rebound move. It has actually acted as a wake-up call for those who are overconfidently betting on small caps and lesser known mid cap counters. We reiterate that it would be extremely important to remain stock specific in structurally good stocks rather than chasing small caps which have risen multifold in the last few months. Decoding the asset relation, that is coming to the macro factors, looking at the global setup, dollar index has further weakened below 102.5 levels, along with the US 10-year bond yields comfortably trading below 3.9 levels. The only worrisome factor has been the slight uptick in crude oil prices over the course of the last week. The index has been fluctuating between 74 on the downside and $81 per barrel on the upside. This spurt has mainly come on account of the security reasons arising for shipping containers traveling through the Red Sea. So the concern could come if crude oil prices continue to further surge on the upside, with the crude oil pricing touches $83-84 per barrel. So that would be a slight concern for the Indian equity markets. Coming to the global markets, the S&P 500 has continued its strong momentum over the course of the last few weeks. If you see on a week-on-week basis, this was the 8th consecutive week wherein the S&P 500 managed to close in the green. We feel that the index can head forward towards the levels of 8,000, towards the levels of 4,830, 4,860 levels on the upside, while support is placed at the levels of 4,650. Coming to the index levels, that is Nifty levels, talking about the index, Nifty has rebounded almost 60 to 70% of the Wednesday's fall and once again reclaimed the levels of 21,300. Rather than searching for resistance, it's important that we look for support and add good outperforming stocks on dip closer to the support zone. The zone of 21,050, 21,000 will act as the immediate support for the index, and till the time the index holds the levels of 21,000, index can rebound up to the levels of 21,580, 21,650 on the upside. Profit booking below 21,000 could lead up to correction towards the levels of 20,850, 20,700 zone on the downside. Coming to the OI data, significant put writing is witnessed in 21,300, 21,200 strikes, while on the call front 21,400 and 21,500 witnessed considerable open interest addition. Overall range for the next week could be 21,000 on the downside and 21,580, 21,600 on the upside. Coming to Bank Nifty, the index has shown better relative strength post Wednesday's fall with HDFC Bank leading the way. Going forward, the 13-day EMA zone of 46,900 46,980 is likely to act as a steady support. On the upside, resistance could be seen at 47,680 47,750 zone. Above the levels of 47,750, index could witness a rebound up to the levels of 48,150 48,300. Coming to the OI data for Bank Nifty, significant open interest built up is witnessed in 47,500 and 47,000 puts, and on the call side it's mainly seen in 47,500 and 48,000 calls, implying a near-term range of 46,900 and 48,050 for the banking index. Coming towards stocks and sectors in momentum, last week post the sudden fall, we saw stocks from the capital goods, pharma, mid-cap IT, banking, NBFC, metal, FMCG displaying excellent momentum. Mid-cap IT stocks witnessed excellent momentum with the likes of BSOF, Persistent, Emphasis, Dixon outperforming in comparison to large caps. With massive open interest addition on the long side, we expect the momentum to continue in this space in the coming week too. Within the CPSE space, NTPC, PFC, REC, SAIL, Power Grid and NALCO witnessed a remarkable outperformance, while Cummins, Siemens, LT from the capital goods space saw decent build up in the last few sessions on the long side. With COVID scare resurfacing, pharma stocks, especially diagnostic and hospital space stocks, displayed excellent momentum with the likes of Metropolis, Lalpath and Apollo Hospital pulling up a good show. Oil and gas picked the lead with Reliance, Oil India, IOC expected to continue the outperformance in the coming week as well. Within the banking space, excellent momentum was visible in HDFC Bank, which led the rebound within the banking counters from the lower levels, and outperformance was also seen from Kotak Bank and IndusInd Bank from the private banking space. From the PSU banking space, counters such as Bank of Baroda and PNB were the outperformers. Also, we should not lose sight of NBFC and AMC space stocks. The likes of Chola Finance, Manappuram Finance and HDFC AMC have seen fresh build up on the long side. Coming to the FIDI data, for the week, FIIs were net sellers to the tune of 6,422 crores, while DIs were buyers to the tune of 9,094 crores. FI long short ratio for index futures has strengthened during the week gone by from 59% to 66%, as they have added nearly 34,449 contracts during the week. On the stock futures front, FIs have bought to the tune of 1,08,788 contracts. Except the cash segment selling by FIs, the data is not hinting any negative sentiment. Hence, we need to be very watchful of the data in the coming few days to ascertain whether Wednesday's fall was a temporary one or there is much more that meets the eye. Just to summarize, the key support for Nifty would be witnessed at 21,000 mark on the downside, and the current momentum could continue up to the levels of 21,560, 21,650 on the upside. For Bank Nifty, the key support would be the levels of 46,850, 46,950 zone, and the index can witness further buying momentum up to the levels of 48,100. That's all for this week's podcast, the SBI Securities Weekly Market Pulse. Wishing you all an excellent weekend ahead. We hope you have enjoyed listening to our podcast and are finding it useful for your trading decisions. Kindly do subscribe to the channel for such updates and interesting insights. Also do share it with your friends and relatives. Until we meet next week, happy trading and stay safe. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.